Hi everyone, I'm Joe and this is what's trending on YCharts. Every month we look through the millions of page views taking place on YCharts to reveal the top stocks, funds, and economic data that people are searching for so that you can stay up to date on the latest trends and make smarter investment decisions. We'll dive deeper into Berkshire Hathaway's price to book valuation, high dividend paying mutual funds, and even take a look at what might be causing those high oil and gas prices, all of which are among our trending topics as of the end of June. If you'd like to learn a bit more about how we gather this data, then check out the description below, and don't forget to subscribe while you're at it. But now, let's see what's trending. Let's kick things off with our most popular company pages from June. And as we typically see, it's our usual cast of characters that make this list. Our Amazons, our Apples, our Teslas, and our Microsofts, the largest companies in the US by market cap, receiving the largest amount of page views. But what's interesting about June's list is that their PE ratios were also among the highest searched for pages on YCharts, perhaps serving as a checkup on valuations amidst this market decline and seeing just how far these high growth multiples are compressing. New on this list as well is value stock titan Berkshire Hathaway, more specifically its price to book value for both A and B share classes. So the valuations playing a key theme this month. Let's hone in a little bit further on Berkshire Hathaway's valuation, looking through the lens of its price to book ratio. And here we have a chart of its P/B ratio dating back to 1996. As we can see, it's currently sitting 22% below its historical average and is also at its lowest level since January of last year. The last time its price to book value was below 1, which is the generally accepted level for fair valuation, was March 2020 when everything was falling. Now, Berkshire is a conglomerate of businesses, Warren Buffett liking to purchase privately held names in full or taking a slice of the pie of publicly traded names through share purchases. Therefore, it does serve as a decent pulse check on the current state of valuations in the market. So with this correction, does it mean its valuation is returning to fairly value territory? Or is this a potential buying opportunity being so far down from its historical average? And now turning to our hottest company pages, those with the highest month-over-month page view growth. Lots of searches were conducted on BRK's P/B ratio in June versus May, so they made the hottest list as well. Retailers McDonald's, Walgreens, and Target also made this list, with Walgreens and Target falling quite voluminously in recent weeks with disappointing earnings. But the standout on this list perhaps is ExxonMobil, receiving 1,800 page views, but more interestingly, its profit margin metric experienced month-over-month page view growth of over 600%, even more page views than the stock page itself. So let's see what people were curious to know about ExxonMobil. Here we have a chart of ExxonMobil and its profit margin, along with the spot price in WTI crude. With gas prices at record highs and oil over $110 a barrel, perhaps there is interest as to how Exxon's bottom line is benefiting amidst the surge in oil prices. Though Exxon won't report those all-important Q2 earnings until the end of July, its profit margin of 8.4% logged in Q1 is above its historical average. Now, Exxon has only broken that 10% profit margin mark a handful of times. The question people might be wondering, can Exxon keep its costs low in Q2 and have a boon to its bottom line in Q2 of 2022? I guess we'll know in July when it reports those earnings. Turning now to the most popular mutual funds and ETFs on YCharts. A cohort of large passive ETFs out there like SPY, VOO, QQQ, and ARKK received the most page views, in addition to more focused securities, such as Spider's Energy Sector ETF amidst the high oil and gas prices we were seeing, and Grayscale's Bitcoin Trust in light of the broad crypto sell-off. But when it comes to the large passive ETFs, there was particular interest shown in the holdings of SPY, QQQ, and Cathie Wood's ARKK fund. So let's go under the hood and see what piqued people's interest so much about these funds' holdings. And the main takeaway could be that these three funds are highly concentrated in a small amount of names. 25 individual stocks make up 93% of ARK, while just its top 10 holdings comprise about 60% of the fund. Investors looking to index track the NASDAQ 100 would have 70% of their QQQ fund investment riding on 25 companies and over half on just 10 names, while the S&P 500 through Spider's SPY fund has 40% of assets in its top 25 holdings and over a quarter in its top 10. Drilling down a layer further to QQQ's sector exposure, we see that it's a combined 85% tilted toward cyclical and sensitive stocks, with nearly half in the technology sector alone. So in turbulent times like these, perhaps it goes to show the importance of knowing what you own. And so looking now at the hottest fund pages on YCharts this month, we see that the main theme overwhelmingly is dividend yield. 7 of the 10 hottest fund pages in the month of June have to do with fund dividend yields. And this is ranging from money market mutual funds all the way to index tracking funds. It seems that investors are particularly curious about dividend yields on funds these days, possibly due to the rising rate environment, as it makes treasuries more attractive than equity funds. But since there are a lot of funds here at play, let's take a look at this chart of all 7 of the aforementioned funds as dividend yields paired with their year-to-date performance. One takeaway of this S&P 500 teetering bear market is how investors are valuing yield and income-focused funds these days. The S&P 500, represented by the Vanguard 500 Admiral Fund here in dark green, is down 20.5% through the first half of 2022, and its current dividend yield is 1.62%. But income-focused funds, such as the Vanguard Wellesley Income Funds, there in blue and light green, are currently yielding nearly 3% and are only down 11.25% year to date. So it seems that in 2022, dividend ETFs are a bit of a win-win, yielding more than the broader market index tracking ETFs and limiting downside. It seems that these dividend ETFs are currently winning the war in this teetering bear market environment. Taking us home is economic data. Our most popular econ data pages on YCharts this month have to do with treasury yields. The majority of this list is comprised of the 10-year treasury rate, followed by the 5-year, 2-year, 1-year, and 3-month rates, as well as the 10-2 spread. There are some pretty hot-button economic issues on here as well, such as the retail gas price, that all-important U.S. inflation rate, and the 30-year mortgage rate, which have been on everyone's minds as of late. But let's take a closer look at what has got people talking about treasury yields these days. And here we have a chart of the U.S. Treasury yield curve over the last 3 years. The 10-2 spread is denoted by the black line, and inverted yield curves have preceded every U.S. recession. The recent flattening of the yield curve, as well as notable spreads such as the 10-2 going toward negative territory, may be stirring cause for concern. Currently, the 10-year Treasury rate is inferior to those of the 3- and 5-year notes. So when a longer-term instrument is yielding less than a shorter-term instrument, it could be an early warning sign of a yield curve inversion and maybe a recession on the rise, something to look out for. And last but not least, our hottest econ data pages. It's oil and gas upon oil and gas on this list. 7 of the 10 hottest econ data pages in June have to do with either oil or gas. We see U.S. utilization of refinery capacity all the way down to very granular items such as the California retail gas price and even the Houston retail gas price, indicators of which we all carry on YCharts. So let's take a look at what has got people talking about oil and gas these days. And it shouldn't come as a surprise that it's probably the price you're paying at the pump. The US retail gas price just eclipsed $5 per gallon, and many are wondering, how did we get here? And how so fast? Some of the blame has been pinned on supply that hasn't been able to keep up with record demand. And we do see that demand for gas is high, as evidenced by the 12-month moving total of US vehicle miles traveled, which is pretty much back to its pre-pandemic high level. On the other hand, world crude oil production as of February and US crude oil field production as of the end of June are not quite up to those pre-pandemic levels of output despite them rising. And though US refinery usage is above its historical average, Americans are back on the road and at the pumps, but with less total barrels of oil dispensable from those pumps than before the pandemic struck. And that'll do it for this month's episode of What's Trending on YCharts. We hoped you learned a thing or two about what's been trending in the markets as of late, including Berkshire Hathaway's current valuation, dividend yields on key mutual funds, and what might really be going on with those high oil and gas prices. To be the first to know about next month's What's Trending on YCharts, click the subscribe button below so you don't miss out. And let us know in the comments, what are you tracking in the markets for the second half of 2022? We'll see you next month for What's Trending on YCharts.